Discussions in this show are for entertainment and educational purposes only and should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research, Inc., a broker-dealer and member of FINRA and SIPC. Advisory services through Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and neither SmartPro Financial nor Bridgeway Wealth are affiliated.
Hey, everybody. Welcome back to the Working Wealth Podcast. I'm Haley.
And I'm Patrick.
And today we are going to be tackling kind of a fun question, I think. Yeah. I feel like it's a popular one in this space, and it's just simply, what do I invest in to grow my wealth? It's a great question.
That is a very good question. And it's like I said, it's a very common question and a very convoluted question, I would say.
Yeah, I was thinking, how like sometimes people like when you start typing in Google, like how to and then options, but this would definitely be probably a very popular search question on Google too.
Yeah, it might be one of the top ones.
Maybe. Yeah, so, I mean, of course, there's a lot of aspects to that question. Where do you even begin with someone?
Yeah, that's a really good starting point. Is I think where you have to really begin that conversation is, what are the actual fundamentals of building wealth, and actually before we go there, I want to take it one step back even further, which is why are we building wealth?
Right, and I was going to say, I guess the way you start to tackle this question is to consider who's asking.
Right. Yeah.
Who's asking?
And that really does play into this because everybody comes to the table with their own perspectives. Everybody comes to the table with their own baggage, their own desires, their own will, their own resources. Right?
Yeah, and very much their own idea of what wealth is and how much is wealth. I'm sure that number changes. Yeah,
and I hadn't even thought about that till you just said that. But
this is why you keep me around.
There's a lot more reasons than that, but this is definitely one of them. Yeah, so I really want to dig into that just very briefly. What is wealth?
Well, and right? I know, and what a heady question.
It is, but it's so important, right? Because, I'm going to say right again a few times here, but I think the concept of wealth is so multifaceted. Obviously, we're here to talk more about the financial side.
Yeah, but the logistics side of accruing money.
Yeah,
we get that.
But I think that it really does go back to that deeper question of why are we building wealth? And if we're talking about in financial terms only, to me, the purpose of building wealth is to create more opportunity to have more resources or have more freedom in the future. And typically, if you are accumulating more assets, you have more opportunity. In the same way that we know that God's not making more land, and the person who owns the most land, especially historically, had the most wealth. They had the most opportunity. They had the most influence or the most impact. And those might be the key words to focus on in that wealth journey. Is, for us, I am not excited talking with a prospective client that just wants to amass the most amount of wealth for the sake of just having a large account balance.
Yeah.
It's more so, what's the purpose of it? Are you trying to have more time with your kids? Are you wanting to retire early so you can spend time with a sick family member? Are you wanting to, build a large account balance or a large wealth of say 10 or 50 or $100 million so you can give half of it away?
Yeah.
And I've heard all those things, right? But I've also heard folks that just say, hey, I just want to, have the most money possible. And I think that's the wrong perspective to have to start with. I think you have to really evaluate and dig into the purpose of the concept of, why I'm on this journey to start with. And that should really be the leading piece of everything we decide on in that wealth journey, like including and not limited to the types of assets we use to build our wealth. So that's where I would start.
Okay.
But I would take that and say, kind of circling back to the other question there, which we got off of, which is, what are the key fundamental principles of building wealth? And we've talked about this before, and I'm really trying to use this as kind of the rallying cry, I would say, for our business, which is the only way to build wealth is to allocate your resources intentionally on the financial side, using the margin in your life, the margin in your cash flow to buy and own appreciating assets. Appreciating assets being things that go up in value or retain value over time, but using the margin in your life to be able to buy them, but also maintaining margin in your life, free cash flow, not being strapped every month, that kind of thing.
Right.
So you can own those assets for a long time and not have to sell them at an inopportune time.
Okay. So kind of getting to the question that we're trying to tackle today, which is like what to invest in, right? And I guess those appreciating assets, that's where those really specific questions come into play, right?
Correct.
That's where people are saying or trying to weigh the benefits of stock market or real estate, which is kind of is two main ones that we hear about a lot.
Yeah, very, very much so. And I'll say this. So I'm going to be as objective as possible in this conversation because I make money from people that invest in both, right? So I'm not the advisor that only wants to manage your assets.
Right.
I'm perfectly happy to take an ongoing consulting fee to help guide you on your journey of owning real assets. That does not bother me. As long as you want high quality advice, I'm here to give it for an appropriate fee, right? The key thing is with that, though, and I'm going to take it one layer higher and then come back down into those two. When we think about buying and owning appreciating assets, historically speaking, there's really two primary assets that do go up in value or hold their value over time.
Okay.
That is businesses and real estate. And for both of those, businesses and real estate, you can own them publicly or privately. So think about the business side. You can have your own personal business. For us, that's our financial planning business, right? I'm an advisor. You're the practice manager, supporting with things, helping me be able to facilitate better advice to people to ideally increase our profits, increase our income, and create more of a residual value of our business that if we decide down the road to sell or bring on other people, we have that opportunity, right? We can directly impact positively or negatively the bottom line of our business. On the public side of that is where we invest in the stock market, or we can invest in private equity, invest in other things that we don't directly impact the bottom line, but by becoming an owner or a part owner of those businesses, we can participate in the growth. We can participate in the profits of those businesses. So that's the business side. You can have your own personal business, or you can have your own, or you can own public businesses, other people's businesses, and get the benefit of
and I just
them.
want to say how specifically someone does that in case they hear you talking right now and they're like, wait, what? Do I do that currently?
No, that's a good question.
See where that might be a little confusing?
Yeah. So if you think about like the public side, that is owning stocks.
Yes.
Right. Is the most prevalent way. So like if you own stocks, and you don't have to own the stocks directly, you can own mutual funds that represent stocks.
Cool.
You can own ETFs. You can own other types of products that comprise stocks.
Okay. How
things
does
like
one?
that.
Okay. So mutual funds. I feel like a lot of people have heard that term. Where does one get a mutual fund from?
That's a good question. That's a really loaded question, actually. Mutual funds are publicly traded securities, meaning they are investment products you can buy through any kind of public exchange. So working with a financial advisor is a very common one. If you have a 401k, 403b, 457 plan at work,
so if someone has an investment account, most likely it is mutual funds.
More than likely, based on the history of the markets.
Okay, that's what I was. Okay.
There are other products like ETFs. Those are exchange-traded funds, which function almost exactly like a mutual fund, but there's a difference in the management style, mostly. That's a little bit deeper than where we want to go today.
Right.
But I think that is a good point, is to also lay out that, having an investment account is different than owning certain investment products. It's like a common thing that people bring up to me is, well, I want to invest in my Roth IRA. Great. What kind of assets should we have in it? Oh, I want to invest in my Roth IRA. Well, that's different, right? The Roth IRA is an investment account, but what you use that money to buy inside of it ultimately affects your growth and your risk on your assets over time.
Yeah.
Which brings us back to the two different growth assets of being businesses and real estate, right? Yeah. But very good question. I'm glad you brought that up. But if we think about the business side, so we can have our own personal business that we directly impact the profits and the losses, the growth of that business. We can have the public side where we can own stocks in a lot of different fashions, actually owning stocks or mutual funds that have stocks in them, ETFs that have stocks, things of that nature. The other side is real estate. And real estate you can also own publicly or privately. So privately, that would be if you own your own personal residence, right? If you
Like a rental.
actually talking about your personal home.
I'm sorry.
Yeah. That's okay. We're getting there. We're getting there.
Funny.
I really
said
like
that
the
with
confidence. Such confidence. We're getting there.
Like
We're getting there.
a rental.
Yeah.
And Patrick says, no. Okay.
But it's so good that we don't rehearse this.
You're single family residence.
Yeah, so this is talking
the thing
about-
I used to write mortgages on.
Yeah, this
I
is
know what
talking
we're
about
talking
your
about.
primary home, right? It's like us, our home here in Simpsonville, like that's where we live, right?
Yeah.
It could also be if you own property that is not for income producing purposes. So that could be if you own land you're going to build on, or if you own a farm that you just are farming your
that.
own stuff, those kind of things.
Okay.
On the flip side, so that's the private side, right?
You let me know when I can say a rental.
It's coming up. I'm going to give you the double finger point, okay? So that's the private side. On the public side, that's where we own real estate for income producing purposes like
Rental properties.
rental properties. Exactly. And that could be two different things, right? That can be residential rentals or that can be commercial rentals, right?
Okay.
So
Right.
residential being if I own a single family home or I own a duplex or a triplex.
Yeah, how many doors do you
And
own? You
how
hear
many
all these
doors,
people
right?
talking about
How much
this.
leverage do you have? You
Yeah.
know, all those kind of things, right? What's your cash flow? What's your cash on cash return? What's your,
How many doors you got? How many tenants
Right.
you got?
yeah, how many problems you got,
Yeah.
right? So,
Sorry.
but we're gonna be objective here,
Used
right?
to be in
So-
commercial real estate. Scarred.
yeah. So thinking about that, right? So you have the two different main asset types being business and real estate. Each of those have subcategories of private and public, right? I don't know what to do with my hands here. I'm trying to lay it out on the table with my hands. So if you're not on YouTube, you should definitely watch us on YouTube because we are just really stupid in here. But anyway, so you can own those two different types of assets, but you can own them two different main ways. You are crying right now. Leave it on. Leave it on. We're going to, do we need to pause for a second?
No.
Oh, this
Okay.
is fun with your spouse. I love it.
Yes, it is.
Anyway, so you have businesses in real estate you can own publicly and privately. That's the key thing, right? A very common question I have, and we're recording this in part to answer some questions from some friends. So you're welcome, guys. I got you. Is should I invest in the stock market, or should I invest in real estate, or should I invest in both? Or
Yeah, and that's
those
the core
kind of
of
things.
what we're asking in this episode, and it's a question I hear as your wife like a ton.
Right, and you even have people that come
That
and
are
talk
too
to
scared
you,
to talk to Patrick that want to ask me.
which just tells me you're looking for validation on your decisions. By the way,
Yeah,
I know these things. So, but anyway, so the reality of this is, I'm gonna pull a little reverse psychology or
Okay.
psychological swing on you here. I don't know what the right phrase
On me.
is. No, on people asking that question,
Oh,
right?
okay.
So
I had to. I was like, I need to prepare.
we're a lot
myself.
more energetic in this than the last episode.
Yeah, we are.
Sorry if you listened to the last one, but we're making up for it here. So what I would actually say is if somebody asked me the question of should I invest in the markets or should I invest in properties,
Okay. Yeah. What would you say?
I'm gonna stop you right there,
Uh-oh.
and I'm gonna ask you a question. Are you a good investor?
And if you were to ask me that question, I think I would meet you with silence because I'm not really sure how to answer that.
Right. And that's the reason I start with that question, right? Because in our world today, especially, and this has been there forever, but especially with, the internet, right? And TikTok and Twitter and Instagram or I guess X instead of Twitter now. Thank you, Elon. But with all the different information coming at us 17,000 times a day from different sources, there's a lot of shiny objects, right? And you see all these get-rich-quick schemes. Oh, take a HELOC on your house to leverage to buy a rental and do your BRRRR method and pay down, or take a HELOC on your house to invest in the stock market, or take a 401k loan to buy a rental. Like all these different things out there are shiny objects that, from my experience, and I'll speak with full transparency here, having hundreds of client relationships and several thousand conversations about this over the past few years, what I've started to see is a lot of these questions come from people trying to take a shortcut on the wealth building
Are
journey.
you telling me that nothing beats good old fashioned discipline?
Ooh, we can just wrap it up right here. The truth is, and this is also biblical, so sorry if that offends anybody, but the process of building wealth is patience and diligence.
Yeah.
You have to be slowly patient with your capital. You have to deploy your capital in a patient, intentional way to buy and own appreciating assets and maintain the ownership of those assets over a long period of time.
But I guess I want to also say that timeline looks different for different people,
It can.
right?
It
So
can.
patience
Yeah.
to one may not be for the other. Like sometimes it can go quickly and sometimes it doesn't.
You talk about the results, or are you talking
results.
about? Yeah. So the results can be different.
Because
And-
I know people
yeah.
who have had highly successful real estate businesses and they do great with a ton of rentals.
Right.
But for someone else looking to do that, it may need to be a more slower, methodical, thought out process.
Correct.
Both can be successful.
Both, yes, and that is one thing I want to point out, like being
Yes.
very objective here, because in all honesty, we've looked at a lot of rentals to purchase.
Right.
We have that's a conversation we're going to have tonight, just so you know that, because I've found some other opportunities. But we have not chosen to actually deploy our capital into any individual properties just yet,
Right.
because we've decided that we get a better return on investing that money back in our business here, so we can help
Correct.
more clients, which ultimately increases
Right.
our income.
But we have a dear
we can-
friend who has a wonderful
we
real
have
estate business, and that's who
we
I
have
always
several friends and
Right.
many clients.
That's right.
I met with some great clients this week that have done very well with real estate over the past years,
Right.
who also have done well in the stock market.
Yes.
And that's where
It's
I
a
want to
good
go back.
combination of both.
Correct. And I'm a big believer personally and professionally. I'm a believer that owning both types of assets is very good over
Yeah.
time. But the way you own them and the level at which you own them is different, or should be different based on each person. And that goes back to my
Right.
question of, are you a good investor?
Yeah.
Because I've had those situations in the past where a client comes in and they say, hey, I want to put this money in this brokerage account or put it in this Roth IRA, and I'm going to be funding this Roth every single year, all those kind of things. And I'm like, great. Hey, here's the plan. Here's the strategy. Let's fund this Roth every single year. And one case that comes to mind is we started that mid-2021, right before everything started degrading in August of 2021 with the stock market. And they made one contribution and haven't made a contribution since, because the market went down and they got scared, right? When in all reality, we know had you made more investments in 2022,
Yeah.
2023, and throughout, more than likely, looking at history, you would have been at a much better position today, because everybody knows buy low, sell high.
Right.
Right? Let's be honest. Everybody knows buy low, sell high. But the key differentiator there of those who are successful and those who are not goes back to, did you buy? And that's why I start with that
Regardless
question.
of if you did you buy an appreciating asset?
Correct.
Because I'm sitting here thinking buying an appreciating asset is better
Then not.
than not.
Right. And that is really like, I'll
whether-
get
'cause I-
so passionate about
And
this
I know,
right
and a
now,
lot of people definitely
because-
look at you and me to want to be against the real estate portion of this.
Because most advisors are so against having
Yes.
their clients invest in real estate because they can't make money off it. They can't charge an asset-based fee, which is passive, which
Right.
allows them to not do a lot of work. Like, they can't actually provide guidance or don't want to provide guidance to those clients to make wise strategic decisions.
Right. But in the
which separates
reality,
us.
some people really enjoy having the real estate because they can touch it,
Correct.
because they feel it, because
Yeah.
you know why? Because it's good for that personality, it's good for that person, and it's better to do that
Correct.
than to have not done anything at all.
Correct. Yeah.
Yeah.
And that all goes back again to that question of, are you a good investor? Right. And the thing I want people to really take away from this is, there's a trillion mousetraps out there. People are always looking for a better mousetrap. Should I buy individual stocks? Should I buy a mutual fund? Should I buy an ETF? Should I buy an annuity? Should I buy whole life insurance and overfund it? Should I buy variable life insurance to pay for my kids' college? Should I invest in Bitcoin? Should I
Right.
buy
Analysis
gold?
paralysis.
But it's all chasing a shiny object
Yeah.
because the reality is whatever you do, invest in what you understand. Understand the results you might get. I was actually looking at returns on real estate and stocks this morning, and I found a few studies that show like 150-year histories.
Okay.
And I have not validated the study, so I'm not going to post the links. But I've just found in a hour-long search digging in, realistically, yeah, the stock market does have more growth potential. Historically, the numbers don't lie, right? Stocks have grown more, but they take on more risk to do so.
Okay.
Real estate is more of a conservative, steady, consistent growth over time, right? But I will say, with whatever investment type you use, you make your money on your purchase. Real estate, location, location, location. Buy low, sell high. Same thing with stocks, right? Buy high quality things, own them for a really, really long time. That's what Warren Buffett has done, right? So the key thing here is you have to be a good investor, because if you can't stick with the plan set up, you're going to make an emotional knee-jerk reaction when things go south.
Yeah.
You're going to get frustrated, and then you're going to write it off forever. And I've seen that with people, even talking about prospective clients, family that's had bad experiences, where they say, oh, my family lost everything. My family made, my parents amassed all this wealth, or my grandparents amassed all this wealth, and then something happened. One of them passed away. The other one went off the deep end. And they blame the market instead of looking at the reality that it's the behavior pattern of the investor that led to the demise, right? And I'm going to be very objective and very transparent and very ruthless about the truth here, because I think that so many people don't want to take responsibility for their own actions. They just want to find something that does it for them. And the idea of passive income is a myth, right? Passive income, I'm going to go on a separate soapbox here, only refers to the way you are taxed by the Internal Revenue Service on your tax return. That's what it is. Do you pay self-employment tax or do you not pay self-employment tax or employment taxes? That's what passive income is, right? It's not having to work, because, again, going back to the philosophy of having margin allocated to buy and own appreciating assets, you don't just have to buy them, you have to own them for a long time. Like anyone that talks about investing in real estate, anyone that talks about investing in stocks, it's all about what are they promoting? The historical returns, historical rates. Well, that automatically implies you have to own it for a long time. Even a fix and flip. Like if you do a fix and flip on a property, or even day trading, well, you have to buy the right thing and then sell it at the right time, right? And control how much you put into it. So to me,
That's why we don't do that, because that would stress me out.
Fix and flips or day trading?
Both.
Yeah. Okay. Gotcha. Because I didn't know what you're talking
Both.
about there.
People can be wildly successful with that.
And I have a lot of friends and a lot of clients that have been.
And it's
but that's
amazing
also
to me.
different for each
just
person.
Not a Haley Rogers.
Yeah. And that's perfectly fine, right? So I think that the bigger question here, right? And I try to encourage everyone to identify what works best for them.
Yeah.
And if you're a client and I've had the conversation where it seems like I've hold on one second.
Okay,
If it seems like I've disregarded that conversation, it's because I've already seen in your behavior patterns or our conversations about what's important to you that maybe real estate isn't the best based on your personal capacity to maintain and manage that. Or maybe the market would be beneficial, but you already do well over here, that maybe we can use this as like a tax play, or we can use it for other things that you're not having to focus on as much day to day. It's just finding that right mix of things together.
Well,
right?
and kind of to piggyback what you were just saying,
Yeah.
One thing to also consider is your spouse. You know what I'm saying? Because it's your money together.
Correct.
And you've got to find what works best for the both of y'all.
And what works best if there's only one of you.
Yes, because we have definitely had
many times
through our halls at the office.
Whether by divorce or death or disability. Yeah.
Just, and then there's one spouse that's super gung-ho to want to do real estate or want to do just one or the other.
Yeah.
You've got to be on board both. So I'm also very interested about tonight's conversation where you're talking to me about buying a rental.
Yeah. No, it's okay. It's fine.
I'm glad that we kind of get to be authentic on here.
Oh, I'm going to be honest.
Yeah, I know.
Spread your comments in the reviews, please. But But no, so going back to it, right? The reality is both are really, really good historical
Right.
wealth builders. And we do plan to own both, right? We do own my plan. We'll talk about it tonight.
You're just so funny.
Apparently.
That was perfect.
No, but we've even talked about, so like we currently rent our office space.
That's right.
Right? We
do.
tried to buy the building next to us and somebody else came in higher with cash.
Right, I know.
So we had to rent the
Now
building
it's all
next.
really funny that we knew the person who was the seller.
Yeah, that is ironic.
It's very ironic.
God works in mysterious ways.
He does.
But with that said, right, it's like the plan is we want to own our own office building because we can control our economics and we can, get some different tax benefits and things like
Yeah.
that. But I also want to use that as a dovetail to talk about it's not just like direct rate of return. And this is why owning assets for a long time is so, so, so important, right? Is on the real estate side, you're not just getting your passive 3.5 to 4.5, maybe 6 in a really, really good environment increase in price.
Okay.
The thing that's promoted so much on the real estate side is you get your price increase, your equity increase is what it's called, either because you pay down a mortgage or your renters pay down your mortgage and or your value increases. But you also get some tax benefits potentially. Again, all this is based on each individual deal. Don't take this as a recommendation, just giving you some ideas here to think about. But you get some tax benefits against your income to help reduce the burden through depreciation of your tax on your cash flow.
Mm-hmm.
And you can use that as a resource to be able to buy more properties, things like that, right? The key thing there is like a lot of the income or the reason you buy assets that can go up in value over time is so then you can use those assets to turn them into income in the future. So like with a rental, if you are net zero, like say you had a mortgage on a rental, which we recommend buying in cash if you can, because that automatically puts more cash flow in your pocket. But if you have a rental and say all your expenses is $1,200 a month and your rent is $1,200 a month, so it's paying for itself perpetually, theoretically.
Right.
This is a hypothetical situation. Please understand that. But if that's the case, right, theoretically, you're getting that property is generating income to pay off any kind of loan against it and is increasing in value at the same time. So that down the road in the future, if all the debt is paid off, you can just start taking that cash flow as income.
Okay.
Right?
Right.
It's the same thing with stocks. And people forget about this, right? When we have an investment account for people, the actual investment products are not just going up and down in value over time. Over a long time, they're going up in value, right, is the goal. And historically, we do that for growth assets. But those assets are also paying out dividends. If you have mutual funds and ETFs that are paying out capital gains, things like that.
Which is like the rent.
That's like the rent, which is getting reinvested into buying more shares, which is the exact same thing that your rent is doing to pay down your mortgage. It's the exact same concept, right? So like if I hear people talk about, well, real estate's more superior because of this or stocks are more superior because of this, it's the same exact concept. I'm talking with my hands a lot, so I'm going to stop. But it's the same exact concept of you have that income being generated that's being reinvested to buy more assets or buy more equity. So as the price goes up, so as the price goes up, you're ultimately building a higher net worth or higher asset value in the process is the way it works.
Huh. That's so funny. It's the same thing.
It really is.
Though people on different sides of the camp get really
agitated
about it.
Right. And that's really so for me, trying to be as objective as possible here is I love both of them.
Yeah.
I want to own both of them.
Clearly.
We bought some land to build on last year. Thank you. We bought some land to build on last year, and we bought in a really good location.
Yes.
And I can tell you based on the properties that have come up for sale even today that you sent me, we might be able to sell that for a profit after 6 months.
Right.
We're not going to. But it's all about making that right decision and investing in something you understand and something you have the capacity to maintain over time. So if you're considering, right, for all my buddies, all clients, future clients, things like that, if you're considering what do I invest in, start with that question of, well, what can I invest in for the long haul? If you want to own real estate and you want to have something you can go and touch, you can go and walk on, or you can go and, paint the building or whatever that may be, really evaluate yourself, right?
And have a conversation with your spouse.
Have a conversation with your spouse. Yeah. Do you have the capacity financially, emotionally, psychologically, physically to maintain that over time.
Right.
And if you don't, reconsider that. And that goes for the same if you invest in the stock market.
Yes.
We have a lot of clients that don't invest in the stock market, or it's kind of a passive, or like it's the, the side thing they do.
The side thing, not their main
Right.
focus.
It's not the main focus. And that's perfectly okay, because as long as we're a good investor first, the investment vehicle matters less and less. And I'll take that to say that if you are someone who's just focused on more of like the real assets on the real estate side, be it residential or commercial, don't let that be a deterrent from also using other types of investments, and vice versa. If you're all over here, don't let that be a deterrent from maybe diversifying into other assets. But the reason I say specifically for those that start on the real estate side and they maybe avoid the markets, understand you can get a better growth potentially of your assets over here, but you also can afford yourself tax advantages that you just don't have access to on the real estate side by itself. So having retirement accounts where you can have tax-free growth, having retirement accounts where you get deductions today and maybe pay taxes in the future. For the most part, that's a different topic. For the most part, it doesn't exist if you're just buying properties, like having LLCs, doing those kind of things.
Interesting.
That is a whole other thing. Like someone's going to probably send me an email that don't know what I'm talking about. I promise I do, but that's a different topic, different day. But the key thing, again, is we've got to focus on being the best investor. And that's where we start with our clients is if we're talking about retirement planning or trying to build wealth for the future, like how do I choose what to invest in, or how do I allocate my 401k, or should I buy this life insurance product, or all the different aspects here is you've got to start with the fundamental of, can I adopt this strategy and maintain this strategy for the long term? Because at the end of the day, every mousetrap has its problems. Eventually, the mouse is going to get on it, smell that cheese, and either take the cheese and get caught, or take the cheese and run away.
I do like cheese.
And cheese is great. But my point in saying that, right, like I realize this is probably a bad example. My point in saying that is not everything works always. And that ultimately depends on your behavior and your decisions around how you deploy your resources for the future, which is also why working with a professional who is competent and can help you navigate those things is really, really important along your journey. But end of the day, both are a really great vehicle you can use. I recommend exploring them to understand, but I've also seen a lot of cases where both sides can go wrong if you can't emotionally, physically, psychologically hang on to the process and see the bigger picture in the long term. So that's a fun topic. I love this topic, clearly. I really love it. I've got a lot of buddies I debate this with. And it's funny because I try to be just on the side of saying, hey, yeah, you guys are all fighting about this, but here's the truth, right? If you do this and you do it really, really well, that's great. Keep doing that, right? Don't disregard black and white, saying, well, I do this, so I'm not going to consider this. Let's consider like how we can use everything to our advantage for our best advantage over time.
Right. Well, perfect. Well, thanks so much. I'm glad that we got to kind of dig into that.
Yeah, no, it's really fun and really enjoyable to chat about. And one thing that we've forgotten to say in all the episodes we recorded that we're supposed to start talking about today is, please, if you like the show, please share it and also leave a review. Only 5 stars. If you have anything less than 5 stars, shoot me an email. Let me know about it. Just let us know. We'll try to rectify that. But we would love your 5-star reviews so that we can grow our audience and grow our mission of being able to help just demystify the financial world and give people clear, concise, competent advice or thought-provoking perspectives, not advice, perspectives on how to view their financial life.
Yeah. Well, great. Well, thanks so much, guys, and we'll see you next time.
Have a great day. Discussions in this show are for entertainment and educational purposes only and should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research, Inc., a broker-dealer and member of FINRA and SIPC. Advisory services through Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and neither SmartPro Financial nor Bridgeway Wealth are affiliated.